Hi there folks, welcome to the EdgebyRS Academy. I hope all of you are doing well and had a good weekend. For today's session, I'm going to be talking about four main topics. The first, tactical trades, also known as market function trades. These are trades that repeat either in pattern or time. The second is, a member had reached out asking me why 50/40s, despite being tested multiple times, was not a short even though we had minor acceptances below 5052, which is the anchor balance low. Why it wasn't a short? Because textbook understanding would suggest it's a short, but yet I was the only one out there, according to him, suggesting that you want to stay long for as far as 50/40 and 50/50 holds. So I'm going to give you a bit of those, give you that insight on why I chose to remain, how do I say this, a buyer at those levels and not really looking for shorts. And of course, when I'm going to be covering the explanation, I'll make sure I'll bring in all the elements that I have taught you guys before. The third topic I'll talk about is the importance of intermarket confluence, right? How DAX played a role last week to help us navigate ES successfully. And fourth, I'll be talking about the overnight patterns that are observed after breakouts or breakdowns that we see. So let me quickly switch my screen here. There you go. Okay, so let's start with the tactical trade. Now, if you recall in the weekly plan, I had clearly mentioned that my general lean is to observe for a gap fill at 5092, a gap that was left behind unfilled on Friday. Now, why did I have that lean? Because oftentimes traders go like, okay, but we were breaking out of the balance on Friday. We broke out of the balance. Why is it that you're expecting another 30, 40 or 50 point reversal? The logic is simple, guys. We are moving into an event. Why will ES, and this is the question you want to ask yourself, why? Why will ES seek to get into this anchor balance? Let's call this the upper balance for ease of conversation. Why will ES get into this upper balance, which can rotate all the way from 5150s into 5240s? That's a massive 90-point move. Now, you don't get those breakouts ahead of the event. You get those breakouts post-event, because then those events essentially feed what we call market generated information. Markets have got the information, now they are going to respond. So first you see markets react on news, and eventually you see markets respond on news. So that's very important to understand, react versus respond. And this is where those tactical trades come in also. So think about it. The pattern is clear. We're not breaking out ahead of the FOMC, and you can look back, and this is your homework again, look back and you will realize that ahead of FOMC, any sort of gap has always been filled. Now when I say always, don't take it in literal sense, it's 8 out of 10 times, because there are those two outlier events where either it does not to trap first and fill later, or leaving that gap behind means there's a structural shift. Now you don't see these structural shifts at 5100. Why? Because we haven't dropped dramatically, neither have we rallied dramatically into the event, right? So if you recall, and again look back, I haven't prepared those charts, and this is what I leave you with to build your muscle memory. But if you look back to, it was November when we had the FOMC, ES had essentially dropped, if I recall correctly, from 4,400s down to 4,130 or 24 ahead of the event. Now that was a massive drop, which started off from 4,600. So it was a continuing trend down all the way down to 4130s. And that is when at 42.15 we left behind a gap ahead of the event. And that was the structural shift that happened, because that is when you would have observed even the FOMC tone change. So events are very, very important to understand structural shifts, because that is that set of information which leads to a change of character. So I hope this is now clear, and is why I was looking for a tactical trade or a market function trade down to fill the gap, because I knew there are full 2 days into FOMC. That's point number one. Point number two, and this is the most important point, which comes from intermarket confluence as to why it was so important. Ask yourselves, Germany, which is one of the most important indices out there, is going off on a bank holiday on Wednesday, the FOMC day. Now, traders do not want uncertainty. What will they do? Liquidate, close their positions. And that's precisely what happened, as you saw DAX pulling back by Tuesday end. And that is one reason why you started observing even ES roll over to fill the gap. Now, this was the bare minimum target I had in mind, of course. We got the tactical idea right. I will by no means suggest that I had anticipated the next 30 or 40 point flush. No, I did not anticipate that. And this is where your runners become important, because they pay you beyond your anticipation and at the same time allow you to assess real time if there is merit to hold these. So as we saw weakness over here, inability to find traction above a post gap fill, the answer was clear. Weakness is here, and we just got back inside balance. This was a breakout failure, and then your runners can go all the way down to the bottom of the balance. Now, next question. Okay, that's FOMC. But wait, we also had Apple on Thursday. We had NFP on Friday. So now you see, we're waiting for 3 big events. And when you put all these events together, you realize that this breakout wasn't really happening. There was going to be a lot of back and forth until we were past all the minefields. Let's put it that way. And that's precisely what happened. We got through FOMC, literally retraced. Now this is something, by the way, if it was only the FOMC and not NFP 2 days later, not Apple, which was the next day, probably we would have continued higher, probably. But given that markets had to spend time until we got clarity in form of NFP, what would markets do? Rotate. And that is one reason we saw a quick rotation down, and the poor low right here at 5042 ultimately got cleaned up the following day on Thursday. Had this poor low been present into the next week or something, or into this coming week essentially, I would have given you another tactical trade. Okay, we are going for this poor low over the next few sessions. But what they did instead, while they were waiting for NFP and Apple later that night and NFP the following day, ES cleaned it up. And that brings me to the question which a member asked me, why I wasn't bearish. I wasn't bearish for the same 2 reasons. Why are we breaking down ahead of the event, which is Apple earnings and NFP? Not happening. Number 2, we are down here, but there's a reason for being down here, which is to clean up the poor low at 42, which is 50.42, which means you're essentially watching for an excess first. So if I just go back to a 15-minute chart, please observe we just have VIX at the same 50-40, 50-60, which was the chop zone I had marked over at Discord. It's the same region. We came back, formed those same wicks. No list framework suggesting a breakdown. We needed to have a full body candle below 52 at the very least. We needed step number 2, which was the subsequent acceptance, another second consecutive full body candle below. All of this was absent, guys. All of this was absent. So if you were bearish, I get it, because there were multiple tests here. But now, if you apply what I am just teaching you, and something I have taught even before, I've spoken about it quite a few times over at Discord, but it's the same thing. You got to understand the structure. You got to understand the pattern. You got to understand the time. The time to break down was not there until we were past all the events. And look what happens. As we got through events, we started grinding higher. NFP, same story. Pullback. Look at this defense right at the FOMC high. And how many times have I told you guys? This is your event strategy. If the FOMC swing high or swing low finds acceptance outside of it, you want to be long. Or in this case, long, of course. If it was below it, we would be short. But you want to be long. And why do you want to be long? Now get your senses up and going again. We battled this region 5124 multiple times before, right? 1, 2, probably 3. Make this 4. Breakdown, failed attempt, goes all the way to the bottom, doesn't find traction, back up again, and now finally breaks out NFP, and there's no other event ahead of us. We are literally clean slate getting into this week at the London bank holiday, right on top, like a cherry. Just add this London bank holiday like a cherry on top, and there you go. You find ES grinding higher. And it's precisely why this morning I took a long, even in Discord, because we were very clear that this would start rotating higher. We were back above the buyer zone. We had the London bank holiday to support us. More importantly, we have now started finding acceptance above an FOMC swing high, and as well as NFP swing high. So back-to-back events, back-to-back swing highs, and you found acceptance. So this is where, guys, you want to understand that certain trades are tactical trades. Now, as we move into this week, deeper into this week, I do so now this is what I would, well, I did not plan to cover this, but I will anyways. Now, this is what I would call the London push. Very simple, right? And any push further that I see from here on, right, could be, I don't know, 5,200s, maybe 5,220s, somewhere in the region, or maybe earlier, right? We'll have to see how today closes, but we start hitting resistance 5194 onwards, right? And from here on, I am now looking for an opportunity to go for a tactical trade, which is retrace of this London move. That is it, guys. Also, since this breakdown that happened on the 15th, we had the first back test, we had the second back test. Now, on breakout, we still are looking for a RTH retest. So what we know is that this breakout was led by Asia, then London, and RTH continued it, which means we are not yet back. We have not yet found RTH acceptance here, which means the tactical side of things, we got to pull back first. I'm not talking about any change of structure here. I'm just talking about we need a pullback here, which means a retrace of this rally is pretty much due. Does it happen tomorrow? Is it day after tomorrow? Is something we start observing, and we'll use MGI to engage. But now that you're mentally ready for this, you exactly know when the time comes that pullback is really coming down to retrace this move. And more importantly, guys, we've left another gap here. So think about it. Gap 1, unfilled. You've got the back test of NFP, swing high, not yet done. You've got this entire London structure which has to retrace. So you see there are a couple of magnets, which is gap plus balance plus event backtest. All of these things need to happen, and hence these are market function trades, and we'll be observing for opportunities to join. And that is precisely where, guys, I get my confidence to hold my trades for a little longer. Again, I hope I've given you some perspective. I'm not asking you to go all out short right away, but at least you can use the idea. So when MGI confirms at either of the resistance that I have, or on a failure of any IB low or any sort of acceleration seen during Globex, you exactly know what section of this rally are we retracing. Okay, so I hope you guys have understood where tactical trades come from and why they come from. I hope you also learned why there was no shorts here, irrespective of what the sentiment might have suggested. Neither the list framework suggested, neither the patterns that we observe, neither our style of trading or approach suggested shorts were there. So I see a lot of traders might have felt that this is negative, but trust me, just because you have multiple tests doesn't make a zone weak. There needs to be far more confluence at that level to tell you it is weak. Had we not had Apple, if we were past Apple and NFP already, maybe I would have a different outlook to this. But given those two elements were still awaiting ahead of us by default, I couldn't have been bearish around it. And lastly, I forgot to mention a point here. Again, observe as we broke out of balance. Every time we do, what you want to observe is if you're forming a higher high or a lower high. In this case, we did a lower high. So when we have this gap here, we know it's a market function trade to retrace down to fill the gap. And there you start seeing these lower highs constantly, and then on 30th ES is even below its value area low. That is it. That was the MGI that confirmed that this gap was going to fill, because the entire pattern then was in sync with my vision that the gap would fill. And this is precisely what we will even look at this week if we find this sort of MGI which will enable us to target a full retrace. And by the way, this will be a good 30-40 point trade. Trust me, worth a week. I'm not saying have a bias yet, but be prepared. And as soon as MGI confirms, you know what is in play. Of course, guys over at Discord will exactly know when and how I will engage, since I'll be calling these out real time, unless they happen overnight when I'm sleeping. Okay, so I have covered most of these points, and yes, and this breakout pattern, again, just observe this. I should have covered this a bit earlier, but again, you've got the event candle. I think this was the Microsoft Google earnings, if I'm not mistaken. We had this breakout candle. Look at the chop here. Again, anytime a breakout that has to fail, a spike that has to fail, any of that sort, you start observing for clues during Asia and London. Look what Asia and London do here. They hold more than 50% of this breakout candle. And what does it tell you? Bullish. Similar. Look what happens here. This is your Apple candle. What happens thereafter? They hold more than 50%. What does that indicate to you? Bullish. What do we know about NFP as a character? Friday, NFPs are bullish. And that's precisely what happened. We held 5107. We were holding our important pivot. If you recall, 8792 has been an important pivot for us. Kept holding. And there you go. Apple popped off it. And then you had a 50% retrace, confirming overnight strength. And ultimately, NFP took over. So again, any breakout candle after hours, always observe what Asia and London are doing, because that gives you clues as to what's to unfold in RTH. Again, there's always plenty of time for us to track areas to participate. We don't need to have any sort of urge or FOMO to click buttons. Rather, you have the idea in mind, plus or minus 10 points late is fine, because your idea is often worth 40, 50 points, or maybe even 30 points for that matter. But at the very least, your entry is always going to have that margin of safety irrespective. So I hope all of this helps you. And again, go through the notes. Again, let me remind you, I've changed the structure of this recording. I no longer narrate every single session because I think these notes do that, but rather I am focusing on teaching you certain concepts. And today, unprepared, but I've also spoken about today's session again because I'm recording this a bit late, so that is the added bonus for you guys. So I hope this was helpful. As always, if you have any questions, please drop me an email, send me a message on Discord, and if you have any feedback for this recording and this structure, let me know, and I'll see you guys again next weekend. You guys have a good, profitable week ahead, and we'll stay in touch. Bye-bye.